Okay, welcome back, guys. Now we're going to do a class example to actually apply some of the theory we've just learned on restructuring provisions. If you haven't read the little note in the lecture before this, please stop now and go back and read that note. It's very important. Okay, so let's go. Restructuring provisions. Let's do an example. Our case study information is as follows. We are P Limited and we manufacture plastic products and we have various plants across the country. We decide as P Limited to shut down a plant as a result of poor performance. We have decided to reallocate staff to the nearest plant. The cost of that will be 60 currency units, rands, dollars, whatever. But some staff will be retrenched for a cost of 40. The question we've got to keep asking ourselves here, are they direct expenditure? Well, yes, both of those are direct, right? Are they avoidable? Well, once we've made the plans and advertised it, not really. The question is, are they part of ongoing activities? Okay, over here, the reallocation. Well, guys, we're reallocating to continue, so that is a no. The retrenchment, that is a yes. Okay, sorry, I got that back to front there. The reallocation is yes, part of ongoing activities, whereas the retrenchment is a no. Okay, we are stopping their employment. They're not going to continue working with us, right? So that cost is not part of ongoing activities. Manufacturing assets will be moved to other plants. Is that part of an ongoing activity? That is yes, we're moving it to another plant. It will continue to operate. Other assets will be sold. The loss on the sale, okay, is 80. Well, here, ladies and gentlemen, the question actually comes from the last set of notes that I made sure you read, right? There it says we must exclude losses or impairments on related assets. So that will not be included. The lease of the premises will be terminated upon payment of a penalty, 125. What do you think? Is that part of ongoing activities? No, we're stopping the ongoing activity. Will be included in the restructuring provision for you to decide for now. P Limited incurred consulting costs for the restructuring of 25. Okay, here you got to check if it's unavoidable or avoidable. Is it directly related? Yes, it is directly related, and it is unavoidable because we've already committed to the plan. Okay, to sell these, close these items down. P Limited has communicated the restructuring to the employees. So the reality here is, do we have an obligation? Yes. It looks like we will have a constructive obligation. A little simpler here because I'm only dealing with things in a very limited model, right? In the real world, it's a bit tougher to apply all the criteria that we discussed in our theory lecture a short while ago. Okay, so take a second. I want you to look at the multiple choice in front of you, push pause, apply your mind, and figure out which amount will you go debit, expense, credit, provision with. Push pause, take a second, and give it a try. Okay, so assuming you've given it a try, let's go through this now individually. What costs are to be included in the provision? Remember, direct costs that can not be avoided, okay, they're unavoidable, and they do not relate to ongoing activities. Let's think about this. The employee termination benefits. I'm going to jump back. The retrenchment costs, I would say those should be included. So the retrenchment costs of 40. Okay, the lease termination, that should definitely be included. There we were told we would pay a penalty of 125. Okay, and the last one is on our last page here. Well, the consulting costs. Okay, consulting costs we should definitely include. They are directly attributable. By this point in the game, they are unavoidable and they do not relate to ongoing activities. And that is 25. Oh, apologies, I wrote a bit of a funny number. The lease termination was 125, not 123. Okay, so all in, 40 plus 125 plus 25 gives me 190 being the total provision. So I will go back and I will raise the full provision for 190, and that is solution B, number 2. Okay, nice and easy, just a quick little refresher on the ones that should not be included. So costs considered part of the ongoing operations and therefore excluded from the provision are obviously the staff relocation costs. Okay, that's 60. The asset relocation costs, also part of ongoing operations. So the asset relocation, that was 150. And the loss on sale of the assets, I'm just going to write PPE, I hope you don't mind, that 80. All of that is not recognized. That's not recognized as part of the provision. Yes, it'll have its own expense item later on. So when I do the staff relocation costs, I'll go debit, expense, credit, bank, or creditors. Okay, it doesn't touch the provision line item. Okay, it gives you a bit of an idea of what to include, what not to include. Remember, direct costs, they must be unavoidable and they must not relate to ongoing activities. If those 3 criteria are met, then you can recognize those costs as part of the provision. Okay, great, guys. Also look out for provisions, well, an attempt in the real world or academically where the information doesn't quite give rise to a constructive obligation, right? So in order to recognize anything as a provision, we must still meet the general recognition criteria, and IAS 37 gives you some guidance on how to apply that to restructuring provisions. Thank you.